Hello there, welcome to Venture Capital. I'm Katie Pilbeam. It's our 10th show. Thank you for your company. Now this week, the US government shut down. No, not here, guys. We paid our bills. There's no budget issue. Let's get on with the show. So just as the US economy was beginning to show the first signs of a recovery, it manages to bang into a wall. Well, a ceiling anyway. So how did the health of the biggest, most powerful economy in the world manage to get itself into such a mess? Well, actually, it's all to do with the squabbling between politicians over health. Meanwhile, the health of the US economy is at risk. The question seems to be about who can hold their nerve the longest, Obama's healthcare supporters or the Tea Party Republicans. Meanwhile, the clock is ticking. Now, the real nail-biter comes on the 17th of October, when the debt ceiling will be breached and the health of the economy will really be on the line because the US government will run out of cash. And while US politicians are all busy arguing about money, economic damage to the already fragile economy is intensifying. According to independent research and macroeconomic advisors, if the shutdown was to last 2 weeks, then it would result in a loss of about $233 billion. So let's first get to the epicenter of it all with RT's Liz Wahl reporting from Washington.
A lot of uncertainty as the government shutdown continues with no end in sight. Right now, about 800,000 federal workers have been furloughed and are not sure if they will get back pay when the government reopens. Well, this government shutdown is historic. It hasn't happened in 17 years, and the worry is the effect that it will have on an already fragile economy. Well, the cost of the shutdown on the overall economy is estimated to be around $300 million per day. According to one market research firm, that's more than $1.6 billion per week. But the financial worries do not end at this shutdown. Another deadline looms here in Washington, and that's the debt ceiling deadline. If Congress doesn't come to a deal to raise the debt ceiling, the Treasury Department says the U.S. will run out of money to pay its bills. Now, that could send ripple effects on the economy with investors losing faith. There could be implications with the value of the dollar, and we could see unemployment rise. With the government shutdown, partially shut down, national parks have been closed. Social services that help new mothers and children have been suspended, and research at the National Health Institute has been halted. The Republicans have been trying to pass bills to fund some of these programs piece by piece, but Democrats are saying it's all or nothing, including the Affordable Care Act at the heart of this deadlock at the Capitol. Well, as of now, there is no clear end in sight, and with each day that passes, more economic uncertainty. In Washington, Liz Wahl, RT.
Now, for more financial analysis, I'm joined by Mark Rubenstein from investment finance company Metropol. Mark, can you give me an idea as to how all of this is affecting the US economy specifically?
Of course, overall, it's negative. The shutdown, it shaves off growth from the economy. On average, we estimate that it could shave about 10 basis points of the growth for every week of a shutdown. But again, it's not such a catastrophe from the market standpoint. What would be a catastrophe is the next battle, if it's lost, the battle to raise the country's debt ceiling.
So what areas of the US economy are particularly vulnerable then, Mark?
One area that is, of course, is one of the most important industries in the U.S. economy is the housing industry, and housing is being adversely affected because banks and credit institutions, they cannot effectively issue mortgages when they don't have access to the government data, which helps them to verify the applicant's income and other things. And since the government agencies are shut down, or operate at bare minimum, banks have problems accessing this data. So that could severely slow down the mortgage issuance process, and that could dent a very nascent housing recovery in the States.
Mark, what about US Treasuries, though? When will the pressure be felt there?
The impact, the U.S. Treasury is the most important financial instrument currently in the financial market. So any trouble with this instrument, that's going to spell big trouble for their world financial system. But given the importance of U.S. Treasury for the health of the world financial system, the chances that the compromise is not going to be found are very slim.
And what about the US dollar then? Are we expecting a fallout?
The conditions that have been created with this government shutdown and the potential battle for the debt ceiling limit, all these conditions will likely to prevent the U.S. Fed Reserve from tapering this stimulus in the near future. So there are now consensus now shifting to the Fed cutting its rate of monthly purchases further down the road in the future. So the current consensus is that we're going to see the cut at the December meeting, announced in the December meeting. I mean, I think we're not going to see it before the beginning of next year, and perhaps even deep into the first quarter of next year. So this all continues to pressure the dollar.
Financial analyst Mark Rubenstein, thank you. Now, this week here in Moscow, I went along to the VTB Investment Forum and I caught up with Andrés Santos Esteves, the head of the biggest bank in Latin America. I asked him about the US debt issue and how the decisions made in Washington affect the emerging economies.
Emerging economies are much stronger than they used to be. So they have more fiscal balance, lower debt, a better economic policy all over the globe. So I do see some effects because what is changing at the end of the day is the cost of opportunity, the global cost of opportunity, the US dollar interest rate. And this is a very important price. So there will be an effect, but it's also important to keep in mind that this tightening in US is related to a back to normalization trend. It's not that we have an inflationary problem or a budget problem. It's a recovery issue, and it's back to normalization. And these, in a certain way, we are moving from a point A that is not so good to a point B that is much better, which is a normal US. The transition implies in some asset price volatility, and we will have that, but it will not be dramatic as it was in the 90s, and especially with a happy end, because when we finish this transition, we'll be in a more balanced world.
And not everyone's all doom and gloom about the US, because I also spoke to Alberto Vermi from Citibank at the forum, and he was actually quite optimistic about the situation stateside.
We're hopeful that the situation will get resolved. It is something that we are monitoring very closely. But we also look at the glass half full in the U.S. And it is historical that when we look at the price of money, at the price of energy, it's been the most attractive levels in decades. And from that standpoint, we continue to feel very strong about the recovery of the U.S. market and would hope that this episode at Congress gets resolved quickly so that we get back on track.
President Obama has even had to cancel his scheduled trip to Indonesia to sort the situation out. He was expected to attend the APEC summit in Bali, of course. Now, Andrei Korstin, head of Russia's second largest lender, VTB, who will be in attendance, spoke to me about the event.
Russia definitely last year, I think, identified itself as one of the leading nation in the Pacific region. And I think from this point of view, as you know, since that time, since September last year, what a lot of decisions inside Russia to develop the region. They include the government investment on infrastructure, they include the special tax regime for business there. So it showed the seriousness of Russia towards developing this region, developing relationship with the region. So Mr. Putin is coming to this event, to this summit. We expect that he will address the business community. He will again speak about Russian policy. So I think we continue to play a very important role, Russia, in this process, and we want to use the still fast-growing market of APEC for our realization of our plans in development. So, as I said, Russia is now very much focusing on this region. We are still part of Europe, but we're also part of the Asian Pacific region.
We're going to talk about corporate news now. It was suspected, now it's been confirmed that Russia's diamond giant Arroso plans to sell an over $1 billion share offering. The company plans to sell 16% of its shares. Most of the shares being put up for sale are currently state-owned. Arroso's shares grew 7% in value after the IPO's announcement. High-end Russian supermarket chain Azbuka Vakusa is eyeing the budget market. It plans to open low-cost stores in the outskirts of Moscow. And good news for caviar lovers. The price of Russian red caviar has finally stopped growing. In the summer, the price jumped 70%. That was due to low yields in Kamchatka, the main caviar producer in Russia. And now we're going to check in with Mr. Sean Thomas and see what he's been up to with his $10,000 US. He was given it 10 weeks ago. What's he up to now? All right, Sean. Hello. Okay. He's not there, clearly. So let's go and find out where he is. Okay. There's no one here. This is very strange, very suspect. What is going on? Ah, okay, this would explain things. Here we go, guys. He's sick. Oh dear. I hope you're feeling better, little Sean. I do miss you loads. Right, let's have a look at what you've been up to. Maybe you're not here because you've been doing really, really badly. No, apparently not. Okay, here we go. So he did invest into finances. He told me he was going to. Banking shares are up nearly 3%, which means he's managed to gain around $250 US. So well done to you. And that brings his total up to $9,593, which means he's close to breaking even. So I hope that's making you feel a little bit better there, Sean. All right then, let's get back to the studio, come on. Okay, I'm back. And it's been another controversial week for the tumultuous world of the Bitcoin. The online marketplace Silk Road was closed down this week and the FBI seized $3.6 billion worth of the virtual currency. Now, Silk Road allowed users to trade in illegal drugs that required the use of the Bitcoin. As a consequence, the value of the Bitcoin plummeted more than $140 US. But fans of the virtual currency claim that plenty of illegal practices have been carried out using the US dollar, the British pound, the Russian ruble, or any other global currency, and that all this really demonstrates is that the coin can be used illegally, or legally, of course. Now that's it for today's Venture Capital. I will indeed be back next week, same place, same time. So if you'll excuse me, I'm going to go see how Mr. Sean Thomas is doing. I'm going to go and bring him some grapes and some tea and lots of nice things.